Hello, everyone. So, we are back for another weekly recap, and what a week it has been. So, let's first kick off with the new announcement that JetBlue and United Airlines made earlier this week. They are launching a new partnership called Blue Sky. And so, with this partnership, essentially, JetBlue customers can book flights with United and then vice versa. So you can be in the JetBlue app, and in the app or website, you will see flights from United Airlines, and you will see the same thing with United. In their app and website, you will see JetBlue flights. This will make booking flights more seamless. If you also have connecting flights, you don't have to book two separate flights with both airlines. You could do it all in one place. Now, I posted a video earlier today, and I think that JetBlue customers will benefit the most from this partnership, as they will now have more options when it comes to flying, especially when it comes to international deadlines. I recall when my family and I were going to London 2 years ago, my parents wanted to fly with JetBlue, and there were only two direct flights. Actually, no, at the time, there was only one direct flight out of JFK, and the other flight had a layover in Boston. So, as you can imagine, not many options, and it became an issue when they had to change their flights to come back home. They were limited on the options they had to get home. And so, something like this would have really benefited them in that they would have more than just one option when it comes to trying to fly to come back home. So I do think this partnership is a good one. And truthfully, JetBlue needed this. They have been struggling financially for quite some time now. And so they have seen revenue decline. They've been working on cost cutting efforts, and they're trying many things to rebound. So if you did not know, one, they're going to start offering a first class cabin. So there's that. And they are retrofitting some of their planes to include this new cabin of service. Now, this will be included on planes that don't have Mint. So, there are definitely going to be some changes there. They're also, they also launched a premium credit card earlier this year. It is trying to compete with credit cards like the Platinum Card and the Reserve. And also, they are expanding lounges, right? So they're going to be launching their first set of lounges between 2025 and 2026. The very first lounge is going to be at JFK. I'm hoping I can check that out. I don't fly with JetBlue often. I'm a Delta girly, but I would love to check out this lounge. So we will all see how that plays out, but it should be interesting. So as you can see, they're trying to do a variety of things to keep their business afloat, essentially. And just to kind of show you guys how bad things are, I'm going to pull them up on my screen here, and we'll kind of walk through some of their financials. Let me come back here. Okay, fantastic. You guys can see. So their stock price is super cheap right now. It's at like $5 per share, which is crazy to even see. And if I do a 5-year view, do you see how much the stock has tanked in the last 5 years? At its peak, it was at about $21 per share. And in a short 5 years, it has definitely tanked. It looks like they just have not been able to rebound successfully since COVID. That's really what it looks like. And I myself can say I am really no longer a JetBlue fan. They used to be, well, Delta's always been the number one spot for me, but JetBlue was always was always in second place for me. They always had great customer service. Of course, they have the most legroom in economy. They were usually on time. And so in the last 2 or 3 years, when I've flown JetBlue myself, it has been such a bad experience. Pretty much every single flight has been late. And it's usually because we are at the gate waiting for the plane to come in, and that plane is late from wherever it's coming from. And then you have to wait. And so it just has this domino effect. And then just the customer service isn't as good anymore either. So, and this is someone, who I don't fly with them often, but the few times that I have done so, it has not been a good experience. But I only flew with them because they were kind of the only option, essentially. Unfortunately. So they definitely have to find ways to keep themselves afloat. If not, they are going to eventually either file for bankruptcy or go out of business or be acquired. And truthfully, just my opinion, I do think if this partnership with United Airlines goes well, they may end up acquiring JetBlue. But that's just my opinion. Too soon to speak of any of that just yet. But if I'm looking down the road and looking at what's on the horizon, I would not be surprised if that was on the table. Okay, so going back to JetBlue. So if we see the stock price not doing well at all, and then if you look at their financials, so I want to look at, I don't know, it's doing this weird thing again where it's like jumping around. Let's refresh the screen. Okay, here we go. So it's doing it again. I don't know why it does this. It never does it when I'm not sharing my screen. But once I start sharing, it does this weird thing where it's like bouncing around and I have no idea why. Let me stop sharing for a second. Let me refresh. Let's see if it stops doing that. Okay, I think we're good. So let me go ahead and start sharing my screen again. Welcome everyone. If you are here, please say hey. Let me know where you are tuning in from. So we're just talking about JetBlue and United Airlines and their new partnership. And essentially, I'm just kind of walking through their financial just to kind of show you how bad things are with JetBlue. So we'll go back to their stock price in just a second. I kind of want to continue from where I am. So they did rebound revenue-wise just a bit, but now as you can see from 2023 to 2024, it's declining. And then the trailing 12 months, it's still on a decline. And then if we scroll all the way down to net income, they're not profitable and have not been so in the last 5 years, last 4 years, actually. So, and it's just getting worse and worse. So they were negative. They've been negative this entire time. So what year was this? This is so ending 2024. It went from bad to worse. They more than doubled their net losses, which is crazy. So JetBlue is struggling financially and they are fighting the good fight. I will give them that. But they definitely have a long road ahead to rebound. So we will see more partnerships like this. So we've seen quite a few in the last year or so between partnerships, acquisitions. That's truly going to be the way many businesses will have to go if they want to stick around. It's definitely been a rough road for the retail space, the travel space coming out of COVID. Now, some companies have done phenomenally well in navigating that. Others, not so much. And if these companies don't get creative, they too will find themselves in a tough spot where they have to file for bankruptcy or close their doors altogether. And JetBlue, they're kind of on that cusp, in my opinion. So just to kind of go back to the stock price, okay, yeah, I'm still sharing. Making sure my screen is still sharing. So this is their stock price over the last 5 years, and it's just been a downward slope since 2021. And so right now the stock is trading at about $5 per share. And so JetBlue is working on just doing what they can to rebound. So they're opening airport lounges, they're offering a premium credit card. They are going to start offering first class cabins in some of their planes. So they're trying to be more competitive in the higher end of the spectrum when it comes to customer base and pricing. So we will see if this works. And then we have this partnership with United Airlines. And so United Airlines, they're actually doing really well financially. So let's kind of take a peek. I think their symbol is UAL. Their stock price is almost $80 per share. definitely night and day versus what JetBlue is trading at right now. And their picture from 2021 to now looks much different. So they've kind of been holding steady in this like weird range. And coming into 2025, the stock just, skyrocketed. And of course, once the announcement came out, the stock price kind of rebounded just a bit again. And so they definitely have a much different picture than JetBlue. So I think this partnership definitely makes sense for JetBlue. And for United, this just expands their customer base. So it definitely makes sense for them as well. So if you look at their total revenue has been kind of holding steady. Well, let's go to annual. Let's go to the annual view. So if we look at the annual view, their revenue has definitely rebounded since 2021. We have a lot of growth, kind of almost doubling. Actually, they have doubled their revenue since 2021, which is fantastic to see. And then if we scroll down to look at their net income is positive, right? So much different than what JetBlue is seeing right now. They've been operating at a loss for the last 4 years. And so partnering with a company that is strong financially, a strong brand, and it has a much more extensive flight network than JetBlue, it just makes sense. And as I was mentioning earlier, I think, I would not be surprised if this partnership goes well, that United Airlines eventually acquires JetBlue. Again, have been no talks. This is just me making my own assumption based upon what's in front of me. So we'll see. We will see how this all plays out. And of course, the other part to this partnership is United Airlines did stop flying out of JFK back in 2022. They will resume operations out of JFK in early 2027. So JetBlue is going to give up some of their slots essentially, and they're going to give them to United. And so that's just going to further help the partnership overall. And there's major work happening at JFK also. So there's a new terminal that's being built, and United may be out of that terminal as well. So lots to come, lots to see. So as an investor, these are things you should pay attention to, because this now could be a great investing opportunity. Now, I'm not telling you what to invest in, but just trying to help you understand how do you take real-time news and use it to make investing decisions. So for example, if JetBlue is struggling financially right now and they're at $5 per share, if you believe this partnership will help them out and they will find a way to turn things around, you may want to consider investing in them now since the stock is so cheap. So let's go back to the JetBlue stock so we can take a peek at it again. So the stock price is extremely affordable, right? So it's currently trading at $5 per share. So this is where, as an investor, you kind of look at this and say, well, what do I do with this information? If you believe, as I said, if you believe in this partnership, you think things will turn around, now could be a great time to buy. If you don't think it's a good partnership and you don't think it's going to work, then you will just pass on it, right? So this is how you should kind of approach investing, looking at real-time situations and say, hey, how can I make money off of that? How can I profit off of that? How can I take this information and make it beneficial for me? So we have to just stop mindlessly listening to the news and put on the investor ear and the investor eyes and say, is this relevant to me? If not, how can it be relevant to me? And how can I make money off of it? So just one thing to kind of consider as you're just going through life. I know for many of us, as we're getting ready for work in the morning or you're home in the evening, you might watch the news, but you're not really paying attention. It's kind of like mindless noise, or you're kind of in and out, which I get, but we need to start taking that information and putting it to use. So just one approach that I like to use personally, and I do talk to my clients about this as well. So something you may want to implement in your own day-to-day. Okay, so next, so back to the partnership with JetBlue and United. So you'll be able to book your flights with both platforms. Also, when it comes to elite status, both carriers will acknowledge your status from the other airline. So if you have Mosaic with JetBlue and you're flying with United, you will receive some elite benefits, and then vice versa. Also, you will be able to use your points to book flights as well. So let's say you're on the JetBlue platform and you've got 20,000 True Blue points, and you see a United flight that you want to book. You can use those True Blue points to book your United flight, and it will also work the other way around. So that's going to make it super convenient for consumers. Now, this is all in theory. We haven't seen it in practice yet. They're officially launching the partnership later on this year. So this is what they're announcing, but we haven't seen it just yet. So hopefully they're getting all of the kinks out so this actually will work and be seamless for customers on both sides. So speaking of United, so I saw an article earlier today where they're going to be lowering their prices on flights out of Newark. Now, the reason for that is, in case you haven't heard, Newark has been a disaster for at least about a month now. They've had so many issues with the flight delays, and it's been really, really bad. Customers have been stranded for days, and there were a few reasons for that. So they had 2 runways closed for repair. They also had experienced equipment failure for the air traffic controllers. Plus, there's a shortage of ATCs as well, right? So all of that combined just made the last 4 weeks really bad. And so they are now trying to attract customers to come back to fly out of that airport. So they are planning to reduce their fares for the upcoming busy summer season. So it's kind of surprising. Normally, when we go into the summer season and it's peak travel time, flights tend to be super expensive, but United plans to make their flights more affordable. So if you have a trip coming up soon, you may want to consider that if you are in the tri-state area. Next announcement that came out this week is e.l.f. Cosmetics. So e.l.f. Cosmetics is actually going to be acquiring Rhode Beauty. If you haven't heard of this brand, it was founded by Hailey Bieber back in 2022. It's a very popular brand amongst Gen Zers and younger millennials. And so they are acquiring the brand for $1 billion, which is crazy since the brand is less than 5 years old. It was developed in 2022, and it's done phenomenally well. And so e.l.f. is going to be acquiring the brand. So the deal is $600 million in cash, $200 million of shares in e.l.f. And the remaining $200 million is contingent upon performance. So based on the company's, meaning Rhode Beauty, their sales over the next 3 years, she may receive an additional $200 million. So altogether, that's going to be a $1 billion deal. Phenomenal. I personally have not used the brand. I'm not familiar with it at all, to be honest with you, but I'm definitely into makeup and beauty, so I may have to check them out. So for e.l.f. Cosmetics, this was definitely a strategic business move for a couple of reasons. One, the brand is popular, it's up and coming, so they can buy it before it kind of scales even more. That just makes financial sense. But also, more importantly, is e.l.f. Cosmetics, more than 75% of their products are made in China. And as we all know, we have this tariff issue going on right now, especially with China. And so currently, beauty products out of China are being additionally taxed by 55%. And so for e.l.f. Beauty, that's a bit problematic because their target pricing is they are the cheaper brand of the beauty brand. So if you go to like a Target or Walmart, e.l.f. Cosmetics, they tend to be much cheaper than like Maybelline or any of the more expensive, or the drugstore brands, even the non-drugstore brands. And so for them to go from being a cheaper, more affordable option, they would definitely have to increase their prices, making them less affordable than they normally are. So this was very strategic in that for Rhode Beauty, most of their products are made in Europe and here in the US. So for e.l.f. Cosmetics, this just definitely also makes business sense. And so since we're not sure what's going to happen with the tariffs with China, this is going to help them hopefully not have to increase their prices at all, or at least not significantly. So if we look at e.l.f. Beauty and we look at their stock price over Uh-oh, this is not, let me refresh this because that doesn't look right. That looks right. Okay, that chart looked totally wrong. So right now it's trading at about $113 per share at close of trading today. And their stock price has slowly increased. And then during 2023, going to 2024, the stock price basically took off. Now it has been on a decline, but that's not surprising for a few reasons, right? The retail space in general has been having a hard time, especially now with the whole tariff conversation. So this to me isn't problematic necessarily. And of course, with the announcement, the stock price bounced back quite a bit. So if you're not investing in ELF, you may want to consider it. But again, this is just information, not a recommendation. Um, what else? So let's look at their financials briefly, and let's see what we are looking at. So revenue, kind of down, kind of up. I would say it's a bit on the stable side. It's not horrible. Let's look at their net income. So net income, well, they had a good year here. What year was this? This was 2024. Oh, looking at quarterly, disregard that. I need to look at the annual view. Let's start that over. So if we look at the revenue, their revenue has increased in the last 3 years. So that's really great to see. It actually doubled from 2023 to 2024, which is, well, almost doubled. So that's phenomenal. And then if we look at net income has also increased. So this is good to see. You like to see a company that's not only profitable, but they're increasing their profit. So I think that's fantastic. And the stock price is doing pretty well. So I think this is going just to be a great company to look at. They don't pay dividends. So you kind of see that here. If you look at the forward dividend and dividend yield, it says 0. That means they don't pay dividends. So there's that. But I see good things here. So that's another major story that came out. Also, Rhode Beauty is going to be sold at Sephora locations later on this year, which of course will just increase their reach and increase their brand awareness. I'm sure there will be a huge campaign once this is ready to go live. So definitely lots of great things going on there. So I will stop sharing my screen for just a bit. Next up, another big article that came out this week is artificial intelligence and how it's impacting the job market. Now, that's not a new conversation, but this week they were showing how it's going to be impacting new college grads and entry-level positions. So apparently what is happening is companies are essentially trying to find ways to not need those entry-level roles. They're trying to replace them with AI completely. And that's definitely going to devastate the job market when it comes to that early 20-year-old demographic, or if you're switching careers, right? You could be older and you're going to a new field and you will be entry level as well. So that is definitely very concerning. Unemployment is already on the rise. And if this trend continues, it's only going to further increase the unemployment rate. And so this is why we all, regardless of where you are in your career, have to think about how can you lean in when it comes to AI. I know when it comes to AI, for myself personally, in the beginning, I was very anti-AI, not from an investing perspective, but from a personal use perspective. I kind of felt like it kind of gave me the ick. I guess that's probably not the best way to explain it, but I didn't feel comfortable with AI. I didn't feel comfortable using it. I had many reservations about it in regards to privacy and just some of those conspiracy things that you kind of hear about. But what's funny about that is I am beginning to realize I've been using AI without realizing it was AI. So, there's that. So now we have to look at it to make your life easier. So that's the that I'm kind of approaching AI with now. It's like, how can I use it to work smarter and not harder? How can I be more efficient and still get the job done, whether it's for work or whether it's for personal reasons? And so it's been a great experience. And so you have to think about, how is AI going to change your career field and how can you embrace it so you now can become the expert in AI in your career field, if that makes sense. And so this is going to be very disruptive. And I think with AI, it's going to be more disruptive a lot faster than we've seen any other technological advances in the past. We are still in the early stages and it's already dismantling jobs and industries. And it's only going to get worse as time goes on, as AI becomes more adopted, easily available. There's no running from it, truthfully. And we have to find a way to embrace that. And so for these college grads, they have to do the same thing. But now these colleges and universities have to also figure out how do they prepare the upcoming classes when it comes to AI and how it will impact their career field and prepare them so when they do come out into the workforce, they are a more qualified candidate. So one story that I saw on TikTok a few months ago, there was a woman who is a copywriter and she, has clients that she writes for and she just has regular clients. They have contracts. Business has been good. And she began to notice in the last 2 years that fewer and fewer customers were renewing their contracts with her. And she realized they were doing that because they replaced her with AI. Now, was the AI copywriting perfect? No, but it gave them a start and they would just have someone in-house just make minor edits. And so she, of course, was devastated and it impacted her revenue. So she had to then find a way, well, how can I become creative and still make money in my business? So what she did was she became an expert in using AI for copywriting. So when companies now are looking to use AI to do this function, she's the person they bring in to teach them how to use it. So this is one example of how a person turned AI from being a negative thing to being a positive thing. And so again, we all, including myself, have to figure out how to do the same thing when it comes to our career field. So definitely lots more to come with that. And this will definitely be an ongoing conversation. So next hot topic this week, of course, it's what it's going to be. Tariffs. It's definitely been an ongoing thing. We talk about it every single week at this point. So the U.S. Court of International Trade made a ruling this week that the tariffs that President Trump implemented were essentially illegal. He did not have standing to impose those tariffs. Now, just to kind of take it a few steps back. So the president had imposed these tariffs under this emergency law called the International Emergency Economic Powers Act. So under this law, it gives the president the power to impose tariffs and certain trade agreements in times of emergency, mostly war. Now, the court ruled that these circumstances we have going on right now didn't warrant that. So they were saying that the tariffs are null and void, and that he could not impose the tariffs that he has over the last couple of weeks. So fast forward, a federal appeals court overturned that other court's decision, saying that he does have the power to impose these tariffs and that they can remain in place until these issues are settled in court. So there are at least 2 lawsuits that have been filed against the administration, and those are pending in court. And so until those are settled, the tariffs as of right now will remain in place. So the next hearing is scheduled for June 5th. And I would not be surprised if at some point this goes in front of the Supreme Court. So yeah, that's kind of where we are. And it's so funny, well, maybe not funny, but it's interesting in that this topic changes by the day. So I remember on Tuesday or Wednesday, the first court made the ruling. So of course, that was like trending everywhere. Okay, no more tariffs. So what do they do with the tariffs that were collected? Do they give the money back? Right? There were so many things that were being questioned when that ruling came out. And about 24 hours later, the other court made a ruling keeping the tariffs in place. And so here we are at Friday, May 30th at 8:43 p.m. That is where we are. Tariffs will remain in place, but by Monday, that could change. Who knows? No one knows at this point. So what that means though is we will start to see goods and services increase in price as long as these tariffs do remain in place. We will continue to see shortages when it comes to goods on the shelf at our stores and locations, because what companies are doing is they're ordering less stuff. The cargo ships coming into the port, they are coming in at 80% full, 50% full. Normally they are at capacity, and that has not been the case since at least February. And it's only going to get worse as time progresses. So with the lower supply, but you still have the demand, it just is going to cause the prices to increase. Now, by how much? Only time will tell with that, but we are going to see that happen slowly but surely. If you haven't seen that already, I know for many things that we shop for at the stores here in my area, the prices are already going up, or you are seeing more empty shelves. When you go to like in the supermarket aisle, you'll see some things are full, but you'll have like pockets of just like empty spaces, and that's normally never the case. Normally, all the shelves are full, they're nicely packed, and they look fine. Now I'm noticing more and more pockets of empty things in various stores, grocery stores, retail stores, and it's only May. So until this gets resolved, we will see a lot more of that. So there is that. So let's kind of jump into some of the earnings calls that happened earlier this week. One of the big ones was NVIDIA. So let me just pull them up and then we will start rocking and rolling. So let me go ahead and share my screen. Actually, is that what I actually pulled up their press release earlier. I kind of wanted to show you guys that instead. Yeah, so hold on. Let me stop sharing that screen. And I want to share this screen. Let's make sure I'm sharing the right screen. Okay, yes, I am. Fantastic. So this is the press release from NVIDIA's earnings call. They did release their Q1 results. And so they're actually doing really well. Surprise, surprise, right? So revenue is up 69% versus last year. So that's what Y over Y stands for. And then Q over Q is quarter over quarter. So they're comparing Q1 of this year to Q4 of last year. So revenue is up 12% quarter over quarter. If we compare Q1 of this year to Q1 of last year, they're up 69%, which is phenomenal against any measure. That is fantastic to see. Then when we look at net income, now let's just do a mini lesson. So net income is basically revenue minus your expenses. You have net income, aka profit, just to keep things simple in case you weren't familiar with that. So net income is up 26% versus year over year. So Q1 of this year versus Q1 of last year. It's down 15% quarter over quarter, but I would not be too concerned about that. Normally, when you're looking at financial, you want to compare year over year. That just gives you like an apples to apples comparison. So just FYI on that. So definitely great results there. Now, if let me stop sharing and let's look at their stock price because of course their stock prices. So let's see. So right now NVIDIA is trading at $135 per share. If we look at the stock price over the last year, a bit rocky, but definitely still, looking pretty good. The one thing I would say with NVIDIA, their dividend is super low, super low. So right now they're only paying 4 cents for the year. So that means for every share that you own, you're getting 1 penny every single quarter. That's super low. So you wouldn't invest in NVIDIA for dividend income. You would invest in them for the value proposition. Just FYI on that. And if we look at NVIDIA over the last 5 years, lots of growth. So in 2020, they were trading at $8.92 per share. So the stock has grown over 1,400% since 2020. That's wild. That is why. If you were an early investor in NVIDIA, you have made hand over money hand over fist, hands down. Crazy. Okay. So next up, let's talk about Elf Cosmetics. We kind of talked about them earlier. And, they are acquiring Rhode Beauty from Hailey Bieber. So let's pull up their press release. So they had published their Q4 earnings as well as their fiscal year of 2025. And so if we look, do they have, no, it's just words for them. So I don't really like that, but it's fine. So revenue is up 28%. They do highlight that here. And net income, though, is down 12%. So let me see. Where did I see that chart? I know I saw a chart somewhere. I know I'm not going crazy. Okay, here's the chart. Here's the chart. So if we look at their full year results, so revenue is up, as we said, 28% versus last year. But if we look at net income is down versus 2024. It's down about 12%. So, something to be a little concerned about, but, not 100% concerned since, overall the financials still look pretty good. And then if we look at the stock price again, which we kind of looked earlier, okay, so here is their stock price. Once again, it's at about $113. I don't know why it looks like that. That's not what I want. That's what I want. Okay, here we go. Stock price definitely has done well in the last 5 years. And with this acquisition of Rhode Beauty, it more than likely will continue to increase. Now, I don't know exactly when the sale is set to happen, but it is supposed to happen at some point this year. I'm assuming it would most likely go through before they started selling it in Sephora stores, but I could be totally wrong about that as well. There was no timing mentioned, but it is on the table currently. So a phenomenal job on Hailey Bieber's behalf and the team she has working for her, because to grow a company to be worth $1 billion in 3 years is fantastic. So next up is Costco. Call earlier this week as well. And let's just kind of take a look at their results. So here is their consolidated income statement. And so if we look at this, revenue is up 8%. So we have revenue here, May of last year to May of this year. Revenue is, wait a minute, hold on a second. Is that what I want to look at? Yeah, it's fine. Revenue is up 8%. Net income is up 13%. So not too shabby. And Costco is doing well for a variety of reasons, not only due to their membership fees and things like that, but they have good PR right now with companies like Target who have a lot of bad PR that is causing their sales to tank. Costco has the opposite going on. They have great PR between their stance on how they treat their employees, their DEI initiatives, and so many other things. And they have a very loyal customer base, and that's growing pretty much every single year. So Costco definitely having a great year so far. Now, at their stock price, let's go back. Wow. Costco is trading at over $1,000 per share. I didn't know that until right this second. I did not know that. That is, wow, that's crazy. I hate to refresh my screen again. It's just doing this weird thing. Okay. So if we look at Costco in the last year, it is up about 28%. If we look at Costco in the last 5 years, it's up over 200%. Steady growth. It has some dips in here, but for the most part, it's for the last 5 years, which is fantastic. They do pay a dividend. Dividend also is super low in comparison to the stock price. just to kind of give you some context. So when you're looking at a dividend, the dividend yield kind of tells you the percentage of the dividend compared to the stock price. And that kind of helps you compare apples to apples. So if you have a stock that's, let's say, $100 per share versus Costco, you can kind of compare them equally when you look at the dividend yield. And Costco's dividend yield is super low. For a stock to be $1,000 per share and they're only paying out $5 for the year, that's crazy. But again, you would be investing in them for the value proposition, not for the dividend income necessarily, in my opinion. So yeah, definitely a fantastic performance on Costco's behalf. So yeah. All right. So that's it for today's live, guys. I hope you guys found value in today's conversation. Let me know your feedback in the comment section down below. Also, let me know what you also want to see covered in future weekly recaps. I try to pull the top trending stories for the week. And it's always so hard because there are so many things that are trending every single week now, it feels like. So I try to pick the ones that I think are the top stories, but that's of course subjective. So that's it for tonight's live. If you're not following me here on YouTube, go ahead and give me a follow. I also have all of my other social media handles in the caption down below of this video. I'm on Instagram, TikTok, Facebook, obviously here on YouTube. I'm also on Threads if you're on that platform as well. And I do have a link to my ebook called The Beginner's Guide to Investing. So it's definitely going to be a great tool for you if you are in the early stages of your investing journey and you want to just learn the basics when it comes to terminologies and just mindset work. Definitely check out that ebook. I do have that listed down below. So yeah, that's it. And I hope you guys have a great weekend. I'll talk to you guys next week. Take care.